Hey, what happened here?
Sorry, Chris, you're muted. Can you unmute yourself?
Yes. Sorry about that, everyone. My name
I thought I had
is.
problems. All right.
Oh yeah, good. My name is Chris Sinke. I'm the Chief Business Officer of Bitrix Global, and the host of our video AMA today. And today we're featuring Mimo Capital, and our guest is Claude, the CEO of Mimo Capital. And I'm gonna let Claude say his last name because if it's anything like mine, it's one that nobody can pronounce correctly. So thanks for joining us
Yeah,
today, Claude.
Claude Eguienta. Yeah,
It's great to see you live in person. And the Bitrix Global team is really excited about this partnership. And we are, I think, all here to learn more about the Mimo Parallel Governance Token and what it's all about.
Hey, nice to meet you, Chris. I mean, we have exchanged emails before, but nice to finally see you and be able to talk with you. I'm Claude Eguienta. So yes, it's just the type of name that nobody would know how to pronounce, except in a few countries, maybe Spanish-speaking ones. Again, the little thing, it's Mimo, not Mimo. It's it is something that. Yeah, but don't worry about it. It's as long as the logo is right, it's fine. But yeah, it's Mimo. It's even shorter this way.
Well, it's funny because so much of our lives are digital today. We actually don't get a chance to say things out loud. We see them written. We assume that they're pronounced one way when they're not. So, Mimo, well, tell us a little bit about your background and where you're located and where your team is located.
Okay, so I'm originally a software engineer. This is what I did. I like a master's in CS, basic as it gets when it comes to people in the crypto industry. I'm an engineer who decided to build businesses in order to bring what I believe is important to a lot of people. So, I wanted to work on a couple of problems such as privacy, really easy to get revenue in different areas. And in a lot of things that I ever always wanted to work on, crypto was there. I built a business at first to try to help creators generate revenue with their art. Then based something like a called Stablecoin, where we try to help people send money back home in a fast, efficient, and reliable way through infrastructure that they already use. Again, using crypto. And now I'm trying to help people first in Europe, but then in a more, I would say, global space to try to embrace crypto in a really easy way and to realize that there is more to crypto than just buying and selling. Crypto can be a part of your life, of your digital life, of your daily life. And well, the product that Mimo is building is trying to be with people where they in their financial journey, not only their crypto journey. We want to merge your financial journey and your crypto journey into a single journey that should be your journey.
Yeah, well, thanks for that background. I think that's amazing to hear everyone's journey into this space and where they came from. I came from a product background myself, and then product marketing. So I've got an engineering background, but never actually put that into practice from a true hardcore electrical or software engineering perspective. So it's really cool to hear where you're from, and I think that's helpful background and a good segue into our next question, which is really diving into Mimo. So I think Mimo's got some really interesting and unique features. And besides you, there must be a really experienced team behind the project.
Yeah. Yeah. They're all much better than everything. I mean, they're better than me at everything they do. They're really good. I can tell you more about this team. You asked earlier that I forgot to answer. I'm based in Dubai, but most of the team is really spread out. We are a remote first company. We do have a couple offices here and there, But I mean, my office is my house, and the CMO's office is his house, and so on. Like our team comes from like rather various backgrounds before we got into crypto. Like we got into crypto and then decided to kind of stick together. We've been like all together for a while. Like there's one common element between most of the members of the, let's say, the executive team at Mimo is that we all lived in Japan at some point. And most of us went through an incubator called OnLab. So we're all like batch mates from some incubator in Japan. And we have our product guy that comes from China. I mean, he's French, but he did all his professional career in China, where we did work together on the product, where he really took the product lead on that product called Tantan. He was like he pretty much built their product, and he's just an excellent product guy. He has this thing of turning a complex idea, complex problem into an app that people can use, and making things that used to be painful really painless and easy to use. I mean, if you see our web app today, we made staking your ETH and minting stablecoins like really simple and good looking, and that's what this guy does, and he has a lot of experience doing that. It's I mean, we got a lot of compliments on that web app, and our up and coming like mobile app will have, I'm pretty sure, as many compliments. So that's for him, and he's helped by Paul, that is a co-founder of our company, that is also like really a very strong product guy that was at 10x before we all joined the company. We have our head of financial product is somebody who's been building smart contracts since pretty much the beginning of Ethereum. He's and he's the person that audited our smart contracts when we built the smart contracts at Stablecoin. He's somebody I always relied on, and he is the person who got me back into crypto when I had sworn not to build anything in crypto ever again in 2013. He said, "No, you should come back. Ethereum is here. You will love it." And then I built Stablecoin. So he's a really very strong crypto programmer that really understands the tokenomics and stuff like that. So that's who we have here. Our CTO, he's a schoolmate, so also a software engineer, but being like he's been at it for also like a solid decade. A lot of experience building financial tools, was an investment bank before, and now, well, in crypto, it's a classic thing. Honestly, like I wanna make all these stories about how everybody's original and all that, but people coming from software engineering, investment banking into crypto, yeah, well, it happens. That's the thing. And our CMO though, a little bit more interesting, because before joining the crypto boat with me in 2014, he was in the fashion industry. He built a successful fashion brand, and then like he worked for, like he was also a professional basketball player, like a champion. And well, then like he joined the crypto craze, built 2 companies with him in crypto, and now he's our CMO. Well, like it's okay, if we want to like make people sound interesting, I should just bring him first. That's the thing. But yeah, like we're all rather vanilla engineers, and there's him. Yeah, that's the team.
Well, don't sell yourself short. You and the rest of the team sound incredibly talented, and that's probably one of the reasons why you decided to get into crypto in the first place. You see the future, and
we
you guys
built
are
our
building
first crypto business in 2013.
There you go.
We've been there for a while.
Way ahead of the curve. So I think you kind of answered this to at least some extent already around usability, but it is on my list of questions, which is one of our users asked, what makes Mimo unique from similar protocols? And can you walk us through what differentiates Mimo?
For sure. I think the best way to answer that type of question is to go from the problem we're trying to solve. So let's go with the problem the protocol is trying to solve. I mean, as a company, we have a little bit like wider ambitions, but well, as a company, you have different products, and our first product is a protocol. And this protocol is really the Mimo parallel protocol. What does this protocol aim to solve? It wants to solve a liquidity issue for euro tokens. Like really, like when we started this protocol, there was no proper liquidity around any sort of euro stablecoin. And the European Central Bank giving like negative interest rates to euro makes it rather impossible to have like, let's say, the Tether type of stablecoin. So in order to make this one work, the only way was to have a stablecoin that has, I would say, a business model that would not force you to take like an insane amount of risk. But we need to have something that people can believe on in the long term, something that is that is just like a solid business model just baked in. And we've seen that there was already such an approach for the US dollar that existed from the guys at Maker. They accept like collaterals like in Ethereum or more tokens, but mostly volatile collaterals, allow you to put them in vaults and allow you to mint some of their US stable coins that you can then repay to get access to your collateral again. And we felt, well, this type of model could work for euro as well. So we re-engineered the solution instead of copying the code, because again, those guys came rather early, and we realized that the space had evolved since then, and that we could take the luxury of rebuilding a new system and then enjoy the luxuries of what was available on the Ethereum ecosystem at the moment. And well, we beat Mimo. So now the problem that Mimo can solve is to allow you an alternative, like to give you an alternative to selling your crypto. You can, today, you want to buy something, you can go and sell your Ethereum. But if you do believe that Ethereum is worth keeping and you don't want to sell it, but you still want to access some form of liquidity, what you could do is put it in a vault and mint some stablecoin against it. The thing is, if you do this against the dollar, your debt is in dollar goes up, well, it's not great. So we give you an alternative and say, now you can also have this form of debt to the protocol in euro. And the other thing that is rather interesting is the platforms that used to do this needed to price your collateral to know how much you could like borrow from the protocol at that moment, right? What we do here is use oracles to price collateral. Like instead of like looking for the price on chain and essentially being vulnerable to price attacks, like unfortunately, like Maker was subject to last year in April. Well, we expect in our protocol, we just like use Chainlink as an oracle to make sure that the price of the collaterals can't be manipulated, and then you have more, let's say, more confidence that you will not be liquidated because somebody is using the platform. So that is really what makes Mimo different from other protocols in the same league. We give you an exposure to euro, and we are like ensuring that there is a protection against price manipulation of your collateral.
No, I love it, and it's really interesting. I've used CeFi platforms and DeFi platforms, and for those listening who don't know what CeFi is, it's centralized finance. And Bitrix Global, of course, is a centralized exchange, and there's decentralized exchanges and decentralized finance. So when you're talking about the euro stablecoin, just from my own understanding, as well as probably some that are watching this, but the euro stablecoin that you were able to extract as liquidity against what you've locked. Can you talk a little bit about what that is and where that's minted and how it's redeemable?
For sure. The name of the token is PAR, PAR. So it's a short name for parallel, because the token essentially follows a curve that should be parallel to the euro. So a PAR is a synthetic stablecoin that is really algorithmic and minted only and exclusively in the form of a debt to a protocol. So it is not like let's say the Tether model, where the stablecoin is essentially a reflection of what is present in a bank account. And you have a bank balance that equates the number of coins out, and well, you make sure that those things are equal, and therefore you have a guarantee that your stablecoin is redeemable and exists. No, like those stable coins are not redeemable against actual euros. They're redeemable for really the Ethereum or the other collaterals like wrapped Bitcoin or Matic on Polygon or even USDC that are locked in the vault.
Got it. So it's a stable coin, but it's not actually backed by euros sitting in a bank account.
Yeah.
It's backed by the liquidity, right? That you've already locked into the on-chain platform, right?
Absolutely.
Okay. And then what assets can you deposit right now to
so it's
lock
a growing
in that?
list.
Like which assets qualify?
Yeah, it's a growing list. It is starting with wrapped ETH. I mean, it's essentially Ethereum. Then wrapped Bitcoin on Ethereum, USDC, and recently we added Matic because we've deployed our protocol on Polygon. And as we are deploying on other chains, we will, in general, add the native token on the chain on each chain we're deploying on as a potential collateral. Because again, the liquidity of the native token of a given chain is essentially guaranteed to be like rather strong. So we will make a choice when entering the chain, then list their token. But for each token that we do list and accept, there is a form of a risk assessment that is made, right? And this risk assessment is based on, will it be possible to liquidate this collateral in case the price goes down, right? And so you need to have some form of belief that this thing can work, which is why we rely on automatic market making, like we rely on AMM pools, like Balancer today, that have some liquidity, some volume. We observe those tokens and make a decision to accept or not. The process of accepting different collaterals is distributed. I mean, there is a vote that users can come vote, like people can come and vote for collaterals. And well, when they vote, people with the Mimo token, which is the governance token of the platform, can decide whether to accept the collateral or not. And it's not only about accepting as a yes or no thing. We have parameters for them. For each token, you do have a debt limit and the minimum collateralization ratio, saying like essentially how much more than your debt you should put in the vault for us to be comfortable with accepting your coin. And well, it's a distributed protocol, so the community votes on that. So when you want to accept a new collateral, you need to say, okay, we would like to accept the Chris token, and maybe having minimum collateralization ratio 300%. So you put a lot of Chris token to be sure that you can borrow something. So you can go with some form of risk and maybe set a debt limit of $1 million. So you know the protocol does not expose itself to have let's say a stablecoin that is not properly backed.
I like the sound of the Chris token. You guys should definitely look into that. That's going to be a good one. So,
the Chris
a couple
token.
more questions. The Chris token. That's right. Yeah, a couple more questions on this point, just to get a good understanding of how the protocol works. I think would be really helpful before we move on to a long list of really exciting other questions we had that we want to dive into. But when it comes to liquidation, like let's say that the underlying asset value drops drastically and you've got an outstanding stablecoin that you've pulled out as part of the liquidity. What's the risk engine look like when it comes to liquidation of the underlying to cover what's effectively a loan that you've taken against your assets?
Yeah, well, simply, as I just explained, you have the minimum collateralization ratio. So, for example, today on Ethereum, it's 130%, which means you want to borrow the equivalent of $100 worth of euro. You need to have $130 worth of ETH in your vault, right? That's the bare minimum. So when the price of ETH goes down in such a way that you have less than 130% in your vault is now open for liquidation. It means it's an open market where anybody can come. And to those people, we say, go and buy Chris Ethereum. They are at 5% discount. And well, people tend to be very happy with a nice 5% discount. By the way, the discount is also a parameter that you decide when you accept a collateral. You need to make the discount large enough to be attractive to liquidators, so then they can come, and even though the price is dropping, if they are confident that, well, I am okay with this price minus 5%, I'm going to buy those ETH now. And this is what happens. So you have a lot of people who are just sitting behind DeFi platforms like ours to liquidate people when prices go down, because well, with 130% on our platform, people tend to behave pretty well. Also, I mean, we're in a bull run, and prices are going up, so it's easy to behave. I mean, you borrow, and the day after, you're safer than yesterday, so everybody appears very safe. But still, like we have rather well-behaved users. However, liquidations do happen, and when they happen, it's an open market, and we have, well, people, for sure, I have seen people waiting on our protocol to liquidate people, and it did happen to a couple of people. To help users with liquidations, we have a Telegram bot that tells you, well, your vault is not looking great right now. You might want to go back on the platform and maybe top it up, or like add some collateral, or like pay back some of your debt to the protocol. So manage your vault, but we're coming with additional suite of products in order to, again, make the protocol feel safer for users. Because right now the protocol is safe for the protocol, therefore the token is safe. However, people have a different expectation of safety. Safety as a user is also the feeling of not being liquidated. What can we do for that? Well, our great teammate and I had a couple conversations, and we're coming up with a different suite of products to help people in those moments where prices are not looking as great as now.
I like that a lot. I think it's a lot better, in my opinion, than a CFI. The way that the CFI liquidates, which just hits an arbitrary line in the sand in terms of collateralization, and then you're just liquidated and you're done. So opening up the vault and allowing the market to participate in that liquidation process, that's really interesting. I've not seen that before. So with that said, I haven't personally used a DeFi platform for borrowing. So I might have to take a look at this, because I also do not want to sell my Ethereum anytime soon. So
Nobody wants to. Yeah, please come and enjoy Mimo. I can walk you around.
All right, I can't wait. So, well, let's get back to the question list, and thanks for coming with me on that tangent. I know we're going to come back to some of those points to go a little bit deeper on them as well, to make sure that our audience is clear on how this all works. But well, let's talk about the protocol itself and growth and adoption. I think adoption is one of the most important factors for all blockchain projects. It's really the holy grail of making this industry better, is bringing in new participants and delivering value to them. So what can you tell us in terms of what the Mimo team has done or plans to do to achieve better adoption going forward?
So again, to answer the question best, it's important for me to go back to what we're doing for the moment and what we intend to do. What we're doing for the moment, again, is issuing stablecoin against volatile collateral, right? For adoption, for any sort of adoption to happen, when you have such a tangible product, you need to prove to people that it works. So we're still in this phase where people have to understand whether they trust Mimo or not. So first, you need to make yourself to make a name for yourself, as in the Euro stablecoin. Okay, PAR must become the Euro stablecoin, and at least one of the stablecoins that they believe is trustworthy. And then for this to happen, you need to have a stable price. You need to make sure it follows the euro. People are not stupid. They will look at how has it been following the euro for the time it has been alive, and they will make a decision based on that. So the first access to increasing adoption is to make a good product, in which case, in this specific case, a good stable coin. So a coin that is really stable. And we're working really hard on that. We're making sure the price of PAR is stable. If you're looking at the price on, say, CoinGecko or CoinMarketCap, you can see that the price is looking more and more stable by the day. And when you set on CoinGecko the default currency to euro, you can see that now we're really, really close to our peg. And no matter the price, we're sticking to the peg pretty right. And we're increasingly big in volume. We are in a multi-million dollar volume a day, which is a lot for Euro stablecoin. I mean, if you look at the market, especially for token that trades outside of curve pools, we are really doing great. So that's the first degree of adoption. Now, the second leg of adoption is that people must know your brand, must know who you are. For this, we have a normal marketing arm that is currently talking with some people in the space in order to increase the brand affinity with people, because the more affinity they develop with our brand, the more chance they will have to use our product. Again, I'm not inventing anything here, but this is an ongoing process, and we are getting our name out little by little, because it's a game of trust. And if you rush it, you might not get the trust you need. You need to have you need to sometimes to play it a little bit slow for people to understand that you're a well-established player, that you're trustworthy, and this is what we're doing right now. Another axis is that you need to be where people need you. So today we're on Ethereum and on Polygon, which means we have low fees when you go on Polygon, and we have like accessibility to a lot of people when we're on Ethereum. Except what we're seeing in this run is that a lot of people are looking for different DeFi platforms on different chains. So we're deploying on different chains, and this is one of the adoption vectors we expect to pay off quite a lot, like to be available not only as a token or as a pair of tokens, but as a platform. Like we are really deploying our entire platform everywhere we go. So again, today it's Polygon. Tomorrow it will be other platform. I'm not disclosing because our engineers will slap me on the face if I disclose what they're working on and before it's ready. So I will keep that for myself for now. But let's say that in the coming months we will be on at least 2 more layer ones where we will be like the Euro stablecoin of the chain everywhere we go. So it means attracting the community there, bringing our community to those chains, and increasing the adoption, the adoption everywhere. Also, our governance token can govern on every chain, because it's the entire platform that is everywhere. We can have different collateralization ratios, different parameters, and again, like a different issuance of governance token everywhere we are, which is again a great fit for adoption. So this is what we're planning to do, treating different blockchains like partners and have them help us grow our name, put our name out, and grow next to them in the broader crypto ecosystem.
Yeah, and we had a community question that specifically dove a little bit deeper into this, but at the same time, it's a 30,000-foot question, which is how do you imagine people, the everyday person looking to get value from Mimo, how do you imagine that person will use Mimo in the future going forward?
Well, it's that depends what we define by the person. Let's define a couple simple personas. Let's say there is Bob. Bob is a crypto head. He's using DeFi every day. He's in a ton of Uniswap pools, Curve pools, and he's on whatever lending platforms day and night. For Bob, we're one more protocol, but one that he can trust. And our journey into Bob's crypto life, if Bob is a crypto head, is that, well, at some point, the yield that he will see on Mimo will make sense for him, and Bob will use Mimo. At some point, Bob might want to use a Euro stable token because Bob wants to hedge something in the broader crypto space or in the whatever space. Maybe he wants to hedge on the dollar position, and Bob will adopt BAR, and that would be Bob's life with Mimo. So the crypto people will use us as one of the building foundations of his crypto life. This is what we perceive, and this is what we are building as an image. We want to appear trustworthy for Bob to understand that he can really rely on us, because Bob does his research. Bob is crypto head, and then you have Alice. Alice might be more of somebody that has a broader set of interests that go beyond crypto. Alice lives the normal life and she lives a crypto life only when she feels like it. Alice is a person of the world. So for Alice, if Alice is in Europe, well, it could be great that Alice has access to crypto in a way that does not get out of her way. Alice does not want to have to click 20 times before cashing in and cashing out of crypto tokens. Alice wants something simple. Well, this is where our, let's say, consumer product expertise comes in. We have experience building consumer apps, and we have experience with regulations. So without telling you too much, what I can tell you is that what we're working on is something for Alice today. We're working on a solution for Alice to embrace crypto and our stable coins, and not only our stablecoin, but actually anything that trades efficiently against our stablecoin as money, something that she can use, something she can spend, something she can borrow against, and all this in the palm of her hand. So again, what is coming and what we're working on is a solution for crypto to be a stronger part of your life. It should not be something that is in the middle of an app that is hidden in a browser, that is something. No, it should be like just right next to your bank account, and it should be a one-click operation to use it. And using it doesn't mean only selling it. It should be, well, do you want to borrow against it and pay for your PlayStation with it? Or do you want to, what do you want to do with your crypto? What do you want to do with your money? Those things should be blended. And this is what we're working on.
Thanks for that answer, and that couldn't have been more clear. And I love the use of personas in there, and I can imagine a world in the future where I act a lot like Alice. But let's take a turn here and talk a little bit at a higher level about the stablecoin itself and why you chose Euro over the USD. What do you think are the opportunities that you see for a Euro stablecoin that have yet to be unlocked, and why did you decide to go with Euro versus USD?
Well, the answer is as unoriginal as it gets. We had a product with a lot of European users, so we had a lot of data that people didn't really have, and we knew that there was demand for it. People were like, "We need a Euro stablecoin. We need a Euro stablecoin, and we want to have a Euro stablecoin." So we don't have to stay subject to the regulations in Europe, and we can have things like based on Euro. Like, if you remember what happened last year. You could go in stablecoin when the prices were going down. The prices of crypto were going down at the beginning of the year, or you could go in. You could decide to go in stocks, like a lot of people did. I mean, you had a lot of options. But if you wanted to go stablecoin, and if you went on USD stablecoins, you lost like 13% against the euro. And for Americans, it's all right. Everything is based in dollar. But think about like Europeans in Europe that just wanted to hedge crypto prices and have a safe option. Well, it's not like a crypto gold is well developed yet. So they just had to stick to dollar, and they were holding USDC and whatever, which is like, again, those are great tokens, but did not match their set of problems. And well, the prices kept rising next to their dollar, and what were they doing? They didn't have any alternative. So we already saw that there was demand, except at this moment, the demand exploded. And not only there was demand for Euro stablecoin, but there is demand for a Euro stablecoin that can be some form of yield. Yield maybe as a form of a trading fee when you're staking a pool, or yield as a form of, again, like a lending fee when you lend this stablecoin. So a lot of things can come with a Euro stablecoin. What's a proper ERC20 token, and what's trade on multiple blockchains, so you can really have incentives all over the place. And those were unfortunately not matched. Like, this demand was unmatched, and we had access to this demand because we had a lot of data. So, well, yeah, that's how we came to build this, and this is the opportunity we decided to seize.
That makes sense. I'm personally curious how you're handling negative interest rates on Euro, or how negative interest rates impact the whole flow of this.
Well, it's as simple as that. Like, if I wanted to make a Tether stablecoin type, right? I would go and raise a couple $1 billion, put them in the bank account. Except at the end of the year, the bank knocked my door and say, "Give me a bit of money. You're storing a lot of euros." Like, this is the negative interest rate knocking the door.
Yep.
Now, when you have PAR, well, you don't have euros in the bank. You have Ethereum below, and Ethereum is not going to knock your door and say, "Hey, give me some of this stablecoin back," right? So Vitalik is nice. He's not going to knock your door. It's all right. So essentially that's really the difference in model. With the US dollar, you can't put like $1 billion in the bank, and you, instead of putting them in the bank, you buy, say, treasury bonds. They are positive interest rates. No matter how low they can be, I mean, it's all right. It's a good business model. It's a volume business. So, look at the market cap of Tether, all these $1 billion in bonds, and you have something pretty cool, because you don't pay for the Ethereum infrastructure. Miners do. I mean, your users do, and miners get the money, and you just issue the tokens. So it's a pretty good thing, but you can't replicate it with the euro. And that's where our model comes in.
Is Mimo and PAR in particular a way to sort of sidestep negative interest rates in Europe, or was there a hidden interest rate somewhere in the system?
No. I mean, it is a way for, from a business perspective, to sidestep the interest rates, because again, the tokens, we couldn't call them stable coins because the price stays stable, but if we are to stick to the definition of stable coin that some regulators like to have, which is a coin that is backed by fiat money inside of a bank account or security, then it is not a stable coin, right? It's there's no real like naming convention that the market has accepted to differentiate those two types of stable coins. Some people call them like the algorithmic stable coins versus the traditional stable coins, but again, like it's all a matter of perspective, and it's really a naming thing. Now, there is a fee that the protocol charges, and this fee is charged per protocol, like per collateral. Today, if you have Ethereum as a collateral, the fee is like 1.75%. It's there is also an instant fee of 0.25%. So let's say you lock them for 1 year, it would go 2%.
What's the 0.25%? That's the withdrawal fee, you said?
No, it's right the opposite. It's when you make your operation, when you borrow from the protocol and you mint, it's really an instant minting fee of 0.25. And then like 1 year after, you will have this 1.75%. And it's a real-time interest, right? It's let's say it's 6 months. It's not like it's going to be zero and kick in 1 year. It's going to be 6 months. You're going to have half of it, right? It's by the second, and it's calculated every time you do an operation. So those funds, again, it's not like the protocol wants to make money. Protocol is just a software running, so it doesn't need to groceries. It's just like the protocol is using these funds for two things. I mean, for one thing today, for two things tomorrow. This one thing that the protocol is using the 2% for is to fill up a reserve. And this goes to another reason why Mimo is, in my opinion, a pretty solid protocol. This reserve, what we call the safety reserve, is essentially the sum of all those interests that the protocol is charging. And as this reserve piles up, it allows the protocol to be even more trustworthy. Because what if tomorrow the prices of the collaterals goes down so much that even the 130% that we have as a minimum collateralization ratio is not sufficient? Well, we could say, all right, now today your euro stablecoin is not that stable, and because it's not backed by valuable collateral anymore. Or we could do something that is smart and have a reserve. And this is what we do. The protocol has a reserve that is growing every day, and this reserve is meant to help for rainy days. And when the reserve is too big, again, it's the Mimo governance holders that decide what to do with the reserve.
Very interesting. Very interesting. So when it comes to earning with Mimo, how does that work? So our users are, of course, very curious about how they're going to earn related to participation. And I'm reading out a little bit more here and kind of digging in here. Talk to me a little bit about claims that it takes zero effort, just leaving your crypto to earn return upon return, right? That's always going to pique everyone's interest. How does that work, and how is interest earned?
Well, the protocol is essentially paying you for any action you take. If you just go and mint some stable coins, like you go and mint bar on Mimo today, which means you deposit some Ethereum, you mint some stable tokens against it, and you just like have a vault rolling. The protocol understands that you're participating into the Mimo economy, and it pays you for that. It sees you as a user, and Mimo rewards all of its users. How does the reward work? Well, the protocol issues some governance tokens to you. Those governance tokens have value, therefore you have 0.4 yield at that moment. So from the beginning of your journey with us, if you're on the borrowing side, really with the protocol, you're paid. Then you have another side to this. The stablecoin is not really useful if it doesn't trade well, which means it must have some form of liquidity, which means that there are some pools, some pools like some DeFi pools, really like Balancer today, where you can take the stablecoin versus something. And today we have pools with bar versus Ethereum, bar versus Bitcoin, and a couple of things like that. I mean, wrap Bitcoin. And in order to make sure there is sufficient liquidity in those pairs, well, the protocol pays you for providing liquidity. So what you do, you go in Balancer, you stake, you provide liquidity. Balancer gives you some token as a proof that you provided this liquidity. Put these tokens in Mimo. Mimo's like, all right, cool. You're behaving well. You're helping the protocol to grow. The protocol will pay you for that, and you earn. Now, it does sound like there is an effort on this side, and like the first part where you just go and borrow and have your and be paid. The other one, you need to go on a stablecoin pool or a pool and doing all these things. However, it is because there is no abstraction layer on the top of it yet. We are working on that and are pretty advanced. And we're not the only ones working on that. We're working with a company that is specialized in abstracting yield with currencies. And this company, we're going to integrate in the coming weeks together. So what will be going on with them is simply that there will be a zero effort like yield with bar, and with Mimo directly inside of their premises. And this is what we want to work on. We work on the protocol that makes it easy for other people to integrate. It's not that we're not going to have our app and all these things, but if you make something easy for everyone to integrate, then you really have a zero effort solution that is distributed and widespread. I mean, we're a protocol really at first, and protocol means like you have a good API, have good returns, have something easy to work with, well documented, and this is what Mimo is.
Thanks for that answer. And moving on to the next topic, I think we want to make sure we cover security and regulation today. So security is always a big concern, especially with rug pulls and hacks and those kind of things. So that's the first part of the question is what is Mimo doing to guarantee security in terms of keeping funds safe? And then number two, regulations. We're seeing today with BlockFi and other centralized finance platforms, and even the Wells letter sent to Coinbase around lending. How is Mimo engaging with governments, if at all, and how are you handling government regulation and boundaries when it comes to this type of decentralized protocol?
Yeah, well, it's a good question, and it is an opportunity for me to let some people in my team shine. So I need to give a little bit of background again. Sorry, it's a recurring theme. Every time you ask me a question, I will give you some background so then I can answer the question. The background is I used to work and be a CEO at Stablecoin. What I was doing when I was there was, of course, like help the company build a great product and all that, but was also to discuss with governments and regulators. What we're doing was to try to help people send money back home, and this meant getting the right regulatory approvals from different regulators all over the world to let us do this. And we're a crypto company trying to send money. Everybody was scared, yet you had to understand that well, regulators are not our enemy. They can work with us, and you need to learn to speak their language, and this is what I've learned, and this is what I'm using today again. So now that myself, and a couple of people in the team are like really well versed in this language, we are engaging actively with regulators. I mean, just so you know, we have one of our directors in Europe that is even the former head of the regulator in the country where we're established in Europe, which is Liechtenstein. We have gone as far as hiring like directors from these type of entities, because we do believe that a good dialogue is the first step in a working strategy. Then what do we need a license for? Again, if we want to enable seamless transfers between stable coins and fiat currency, we either for ourselves or for our partners need to provide non-ramp and an off-ramp. This cannot exist without a form of regulation, because it will open the door to money laundering. And we don't want to joke with that. Like it's a serious problem. It is one of the reasons why crypto has not been taken seriously for so long, and we are firmly against playing the cowboys here. So we are actively engaging with regulators, especially in Europe, and then we'll grow well, different regions as we expand our scope. The second part about security is it's an important thing to see how people see us in the space today. Like some people would be saying that Mimo is a nice protocol and all that, but they're not shipping features at breakneck pace, even though they have a lot of engineers. Well, that's because we care a lot about security. We do like work very fast inside, except part of the work is auditing, and part of the work is really reviewing a lot. And we're working as as close to already being taking security as seriously as you can take it. Like everything you can use on the protocol today has been audited by timestamp. And we're not talking about some random run-of-the-mill audit firm. We're talking about like pretty much the best guys in the space. Like nothing those guys audited and gave a green flag to has ever suffered a major hack. And well, it's already a badge here that we have. Now, it doesn't mean that we stop here. We got a second audit after that because, well, you never know. A second pair of eyes is great, even though at this point it will be the third because there is our pair of eyes first. And we keep going like that. So every single thing that we publish and that is in protocol today has been audited. So even though the protocol is open and it's centralized, and anybody can propose any change, so far what we have accepted was that, and the Mimo governance holders, Mimo governance token holders, do understand that this is a priority and will not let non-audited code make it to the core of the protocol. You're muted.
Sorry about that. Thank you. I wanted to make sure that I wasn't creating any background noise. So thank you for those answers. It's really encouraging, I think, to see a protocol engage directly with government, and that's something rare. It's something that we spend a lot of time doing. We're also licensed out of Liechtenstein, and that's our home market as well, and so we know how serious that regulatory body is, and you know we are constantly engaging with the Liechtenstein FMA, the Financial Market Authority, on understanding the TBTG, which is the Blockchain Act that was passed in Liechtenstein, which governs crypto and tokens and digital assets in the European Economic Area.
Yeah.
And so, yeah, I just commend you guys for engaging directly with regulators, because I know how difficult that is. And it's certainly one of those things that you can shortcut and gain a lot of adoptions with users, but it'll come back to bite you if you don't do things the right way. You'll end up in
that is very
eventually
true.
you might end up in jail or something. So
on
top of creating a negative cycle for the industry. So
But that's good. I think what you're raising right now here, sorry to interrupt, but I think you're
it's
putting
good.
the finger on something really important. There are different ways to become successful in crypto. You can become successful like with a quick rush and with a lot of money coming in and do like essentially, I would not call it a scam, but some projects are really here for the short term. And some founders actually just make it clear like, yeah, this is a one-time project. This is for now. We're having fun. So that there is a part for this thing in the industry. But you can also try to add value and become a building block and critical piece of infrastructure. And this is what Mimo is trying to be. Mimo aims at becoming critical piece of infrastructure for anybody who's either using or building on the blockchain. For this to ever work, we can't decide to play cowboy. We have to. I mean, especially if we want to be vertically integrated, we have to do this. I mean, before we put the protocol online, we went to see again the top 10 global law firm to ensure that even our launch plan was kosher. We made sure that we described the protocol, like discuss the white paper, discuss the code directly, and say, look, we're going to put this online. Does this work? Would we be subject to any financial regulation? And the answer was a resounding no. We did work with the lawyers to make sure that things were as clear as possible, but now we have this confidence. So this goes back to the question you asked me a little bit earlier about the security and the regulation. Even before the regulation, you need to make sure that you're either captured by it or not captured by it. We are doing some work that a lot of protocols just didn't do, and we can be sure of that. So when we know that the hammer of the regulator does not necessarily strike immediately, but when it strikes in a couple of years, at least you will know with Mimo that our homework had been done. And this is the thing. Like when you've gone about a stablecoin, it's not about something that you want to hold for 6 months and then that's it. You want to be able to hold it for years. So you need to make sure that it is really something you can count on. And this is why we're doing our homework this way.
Yeah, absolutely. I mean, doing things the right way in the eyes of regulators and the law and is not only ethical, I think, but also the way to maintain longevity, long-term success. Otherwise, early adoption or quick adoption, I should say, in the face of cutting corners when it comes to those areas may seem like the right way to do things in the short term, but it absolutely will come back to bite you, as we've seen with regulatory action over the last 2 years. We've seen it. And some people are sitting in jail now that didn't have to be. And they decided to cut corners and ignore the laws. So it's really encouraging to hear that you guys are doing things the right way. And that's what we like to see. Those are the types of projects that we like to align with, because we're the same way as well. We focus, oh my gosh, so much of our time on security and being regulatory compliant. I can't even tell you how much of my day is spent focused on those two areas, because we believe in the long-term vision for the industry and being good stewards. So I'm glad that the Mimo team does as well. So speaking of Mimo, let's get back to that. Let's talk more about your roadmap and the future. So tell us what's next. What are the next priorities and goals, and what does your team have in place to achieve those milestones?
So again, I mean, we've been talking a lot about what we're trying to come up with. I try not to say too much about like a roadmap, as in a list of, let's say, detailed timelines and targets that we will achieve from a public perspective, just because it ends up becoming a promise that is sometimes difficult to really to hold. Just for the basic reason that not everything is under our control. But what I can say is that we're coming to different chains. We already, I mean, the work is done. We're undergoing like review and testing phase right now already on several chains, and we're releasing Mimo and Bar, like really the entire platform on so different dexes, different chains. So that's the first thing. Then the integration of our ecosystem in the consumer apps, first partner consumer apps, then our own consumer app, which will have a certain perspective. Again, it's for Alice, the person I talked about earlier, the person that would be in crypto, but also mostly wanting to live a life and not being bothered by how does every DeFi protocol works, but just like wants to have fun and wants to have yield. So Alice will have an app that we build, and Alice already has other apps built by other people, and we will try to integrate these type of apps. So really, we're trying to integrate from a vertical and or horizontal perspective within the space. Then in addition to integrating everywhere and trying to be as stable as possible, from a pure protocol perspective, we're adding features that would give a little bit more flexibility in how your vaults are managed, in how your collaterals are managed, and what you can do with your collaterals. Like today, really collaterals just sit and sleep in the vault, and you just come borrow. But we've seen that some people have been requesting different features. They want to do more with their collaterals. They want to have the possibility to cycle the borrowings and a couple things like that. So we've been working real hard on improving the protocol. So there is, let's say, it's more compelling to bug the DeFi head. And it is important. Again, the protocol needs to be attractive to people really at the core of our industry, because at the end of the day, even though we build the software, it's the users that build the space. And if you build for the real users, the core users, and listen to them, understand where they're coming from and what matters to them, you have a much more solid chance to become successful and to have your product being used by a broader amount of people.
Speaking of users, that's a great segue for our final question today, which comes from the community and just in general. How can they get involved? So how can our users start to become part of the community and start earning?
So, well, there are a lot of ways to get involved with Mimo. The first way to get involved with Mimo is to come working for us. I mean, we're hiring, and that's great. You can just email tech@mimo.capital or email me, Claude@mimo.capital. We're hiring, and the first and the best way to come with us is to work with us. Now, on a different note, you can join our Twitter. We're really Twitter Mimo DeFi. We're on Telegram, also Mimo DeFi. You can come. We have like admins every day here to answer your questions. We're really happy. The community has a great atmosphere, which can't be said about everyone. Like every community around, some communities really let everything slide. We try to have a really happy, friendly community, and to be honest, our community members are amazing. I can't thank them enough for really like staying around, understanding what we're trying to build, and really building this thing with us. Like the Mimo community, that the people that we're now calling the Mimotors, is really strong and growing. And well, you're invited to join them if you're interested in just at least seeing what we're going to come up with next.
Well, thank you, Claude, for joining us for this AMA today. I know I learned a lot more about Mimo, and I hope that those listening did as well. We are really excited to be partnering with you guys moving forward. And I'm excited for the future of the Mimo Parallel Governance Token. So for those viewers, so for the viewers out there who want to learn more about Mimo and the Mimo Governance Token, please go to mimo.capital. That's MIMO.capital. And thank you again, Claude.
Thank you so much. Yeah, come anytime in the community. Chris, you're welcome. And if you want to do the Chris token, you can just give me a call.
That sounds great. I might do just that.
Have a great.
Have a great.
Thanks so much.
You bet. Bye-bye.